Okay, everyone, good morning. Welcome to this panel discussion. We'll be talking about future prospects of investment focusing on emerging markets. My name is Lily Liu. I'm a news anchor from CGTN. Let me give a brief introduction to my guests of today. Mr. Rodney Tsang. Is that how to pronounce your last name? Okay. Rodney has 20 plus years of experience in investment, and he is the co-founder of Hammer Capital, and since 2013. So Hammer Capital has a team of 20 plus experienced professionals from banking and industries background. So today we hope to discuss a lot of related topics with Rodney involving investment in the technology field. And right next to me is Mr. Eddie Chen. Eddie Chen is the managing director of Fullerton Fund Management. Eddie has a career path that spans from IT executive and diplomat to senior management official in private equity investment. So Eddie has extensive international experience. So Eddie will tell us about his experience and what he sees as investment opportunities right now in Southeast Asian, especially, and also other emerging markets as well. So welcome, gentlemen. Would you like to say hi and give a brief introduction to the audience?
Okay, I'll go first. Hi, everyone. Thank you for coming. My name is Rodney Tsang. My own company is Hammer Capital, but prior to that, I done a lot of years in investment banking. So in total, it's actually 30 years. So thank you for understating my age. Certainly have witnessed China from a very, very backward development stage to all the way up to now. So very happy to share some of my, my views with everyone here today. Eddie.
All right, Eddie.
Thank you, everyone. Great honor to be here. This is Eddie Chen. I currently working for Fullerton Fund Management based in Singapore. We also launched, just 2 months ago, launched a new Fullerton Carbon Action Fund. We'll be focusing to invest in ESG decarbonization portfolio companies. Before that, I worked for a French private equity firm for more than 10 years doing cross-border merger acquisition deals, China, Europe particularly. And then before that, I certainly worked in Sweden as a diplomat, and also worked for the UN in New York for many years. So lots of different experiences. Happy to be here to share. Thank you.
Great, great. Looking forward to our discussion today. So we're going to focus on emerging markets. But first of all, let's take a look at Southeast Asia. This is basically where we are. We are in Macau. Macau is, let's say, it's one of the gateways to Asia. And let me go to Eddie first, because I know you're based in Singapore right now. You must know the Southeast Asian markets very well. What would you be looking for when you make an investment in those markets, especially on the ESG side, because that is so popular topic right now?
Yeah, I think if we look at Asia per se, there is a different competencies in different part of the Asia. But today, when we talk about Southeast Asia, China, India, those are the emerging economies. Among those emerging economies, basically, you're seeing lots of activity and heavy development going on, and in almost every sectors, from digital, healthcare, consumer, manufacturing, traditional manufacturing. But there is one trend, it's really happened big time nowadays, is the ESG and the net zero development. The reason is there is a big trend going ahead of us is every country under climate change framework, under the UN climate change objective, from Paris Agreement to Glasgow Agreement last year for COP27, every country in this region already set their carbon neutral timetable. Say China is 2060, India is 2070, Singapore is 2050, many other Southeast Asia countries like Indonesia, Thailand, Malaysia, etc., they all set 2060 in that line. So thinking about we having another 30 to 40 years to achieve carbon neutrality, can we do it in this market? You'll have to do it because the timetable is there. If you don't do it by then, there will be heavy, heavy penalties to the country, to the nation, to the economy, to industry. But how to achieve there, the transition is the challenge. Because as we know, if you look at the European, EU, many countries already achieving the peak, we call the carbon peak. While in this market, in the Southeast Asia, in China, India, we so-called emerging economies in this market, we haven't even achieved the peak yet. So China has been announced achieving the carbon peak at 2030, and then a carbon neutrality 2060. You feel it's a long time to go, right? I tell you, coming from decarbonization, it's a really tiny period short of time. So challenge is big. So then the question is, how do we do that? We have a timetable, we have the motivation, we have the objective, you have to do it. So now it's in the point of everybody now, from government, public, to private, to capital market, to industry. We're all now sitting together. We're all focusing very specifically, try to achieve the ESG and the net zero objective, and through a policy, through a trading, carbon trading, through a incentives, through a specifically some focusing on the industry. For example, we launched a carbon action fund, as I mentioned. We're going to invest in 3 markets: Southeast Asia, China, and India. We call the emerging economies of the Asia nowadays. And we're going to focus on 4 sectors, 3 markets plus 4 sectors. Renewable energy, so we call energy transition. Not so much on the infrastructure, but the value chain. Secondly, we know in this market, there are lots and lots of industries, traditional industry, manufacturing, from steel manufacturing, cement, supply chain manufacturing, huge amount of manufacturing capacity in this market, but many of them are now far away from achieving carbon neutral and ESG friendly as well. But however, you have to do that. So we think we're looking for opportunity, a company helping the traditional industry to reducing the carbon emission and to be ESG friendly. Then a mobility, electric vehicle, renewable energy, car, battery technology, etc. That's another very exciting sectors to come. And then last but not least, we're also seeing the opportunity in the agri-tech, because agriculture also accounts for close to 22% global CO2 emission. So there is many other opportunities, but we're seeing those are the 4 sectors accounts for a large amount of CO2 emission in this market, in this region. And now, since we all put our mind, our hearts together, try to address, to deliver carbon neutral, friendly world going forward, we're seeing there's lots of opportunities. So maybe if there is time, we can talk more about that. Thank you.
Yes, but you said that you truly value ESG practices when you're looking at a company. One thing is that the business, they're aware of that, the importance of ESG practices. The other thing is to actually implement it. You said there are many challenges as well. Many companies and industries, they are far away from achieving what you call a standard ESG standards. What is the reason behind that? And what are some of the hurdles that you're facing right now? And as capital, as fund management, what is it that you can do to help them?
Yeah, Lily, I think they're very good questions. I mean, this is the questions we try to address, to deal with every day in our investment process. And when we're from a selecting company, doing the due diligence, then we invest, doing a post-management until we exit. So if you look at the ESG and the net zero, there are these are 2 different concepts. ESG is more a environment protection, corporate social responsibility, and the governance, of course, ESG. Then decarbonization, you're dealing with a carbon credit, carbon footprint. So you have to calculate. But in a nutshell, they really means the same thing, because you have to be a responsible company. One of the key parameter is to be environmentally friendly, right? You cannot emit CO2 too much. You have to reduce it to 0 at the end. And you have to polluting the environment, for example, so etc. So from ESG decarbon perspective, there was a transition way back from 20 years ago from concept, people, the responsible company, society saying now company can not only maximize their profit as your only objective, you have to be sure as a responsible operator and the entrepreneur or the company in the society. But gradually, there is in the last 15 to 20 years, things are from talking to action now become a regulation, becomes a regulatory measurable framework out there. So your first question regarding the challenge we're dealing with this market. If you compare with a developed market in Europe, in North America, many of the countries are already achieving the carbon peak. So it means they already spent many years already working on the systems, regulations, and also now we translate that into carbon credit and certification, for example. And the ESG, there is different standards as well. So, but in Asia, in emerging market, we are latecomer coming to this sector. Even 5 years ago, people only talking about it. There is no any serious action to it. But today, suddenly everybody waked up saying, hey guys, you have to do something, otherwise you're going to be out of business.
But that didn't happen just overnight, right? It's a process.
It is a process. So I must say that in this early stage of the process, the public side, government, regulator, they're going to be taking the leading role from a regulation, a measurement, requirement perspective, of course, including lots of public investments, incentive system. So for example, solar power, electric vehicle, solar power, wind power in the last 10 years in this market or globally, you can't live without government public support, right? Incentive or reduce the tax benefit. Otherwise, you can't ask industry to invest while you're losing money, then you can't sustain. But today, I think with this, we're seeing the private market, capital market, industry themselves, self-motivated. We're looking into this opportunity. We're seeing this is the time to come. It's not going to only for good mindset to invest in ESG and decarbonization. It's a must. It's for society, must for the regulation. But it's also, it becomes, you can see, if you do well in ESG, if you do well in reducing the CO2 emission, you actually can changing your financial situation, you become more profitable. You can make more profits.
It has to be beneficial to the business in the first place.
Exactly. The time is there. Now we're seeing that. That's why we're seeing a highly active market for all industries, from ESG compliance, from a decarbon impact, business development. So today, one message very clearly. So today, ESG decarbonization for any business, it's no longer be a choice. It's a must. What that means, if you don't do it, you're going to die. The company, your business is going to be out. Not in 30 years, very short. So in other words, the time is really coming, the awareness, the society, globally, and the climate change. So everything's ready. So I think this is, it's a paradigm shift. The time is right. So transition to a friendly, ESG friendly and decarbonization, a society, industry, living environment, now is really paradigm shift. It's coming. It's right there. It's right in front of us.
The time has already arrived.
Yeah.
So Rodney, is that also happening in the tech world?
The tech world also, I think, has experienced a very dramatic change in operating environment, especially in China, with the 3 years of lockdown and as well as the geopolitical changes between U.S. and China. That has a very profound impact on the way a lot of companies operate, because a lot of companies in the last, I guess, good 6-7 years has been really just operating with one single objective, growth, and growth at all expenses. I think now companies have to exercise a lot more financial discipline. They have to be much more well thought out in terms of their revenue model, as well as how much expense they can sustain. So in a way similar to what Eddie said with ESG, you have to be mindful on how you can continue your business in a sustainable manner. And what happened is that you have seen massive consolidation. You've seen the number of IPOs drop dramatically in the capital market over the last 12 months. The number of financing has dropped significantly in the private market. And frankly, even for most of the active PE fund and growth fund and VC fund has found fundraising a lot more difficult over the last, especially 12, 18 months. So, I mean, a lot of people have to cope with a lot of these changes very quickly. So definitely from an investment point of view, you have to change the way you look at things a lot now versus 2-3 years ago.
Okay. But for technology firms, the thing is, how can they actually start to incorporate ESG ideas and awareness from the very beginning? Because as investors, usually when you invest in a technology company, you would be looking at the technology first, and then the story, maybe the people. But then, let's say everyone's so hot on generative AI right now, if this is a company that wants to develop something like a chat bot or something, what kind of efforts that they can make to actually promote their ESG standards and practices?
Yeah, that's a good question, but it's not a question that has been asked often enough, frankly. I don't think any investor right now, as well as company startups that are trying to raise money, the topic of ESG will come up very often in the discussion. But from an investment point of view, speaking from my own experience, which I have been investing actively for the past 9-10 years, the part that I have reminded myself to do is to invest in companies that will help or be a contributor in helping promoting less traditional fossil fuel consumption. Now, for instance, we're very early investing in EVs, and then also mobility, autonomous driving companies that ultimately will lead to a better efficiency to the whole society in mobility as well as energy consumption. Now, but when we make the investment, could we get any numbers to objectively quantify and justify how much carbon reduction we've done? No, because right now these data are not that available. And especially you're talking about a startup, they haven't even got a business going, so it will be hard. But I think the overall finance community has enough exposure on this topic in the last, I call it 5 to 7 years. I think there is a part of them in their mind that they know they have to make some conscious effort in making investments relevant to this endeavor. But I think, like Eddie said, how do you put it all together? How do you put it into a objective KPI measurement where everyone can be measured against whether you are on target or you're missing the target or you're over the target? That is something that I think we need to, some road to go until we see that happening.
If I can echo maybe on this point as well. From an investor, PE fund investor perspective, nowadays for our dedicated carbon action fund, we actually, when we're looking at a company from selecting, evaluation, or we call it due diligence, we are doing two processes simultaneously. One is the traditional investment process to checking all the company products, team, their financials, your growth potential in the market. We have in parallel, we have another team in our firm called ESG team. So the ESG team are going to having a separate set of criteria from ESG evaluation perspective. Are you a responsible company? Are you meeting all those criteria from ESG perspective? It's not about checkbox. It's actually evaluating very much like a financial investment professionals evaluating a financial data, right? At the same time, we also try to define a roadmap for this particular portfolio company. If we do invest, what's their CO2 emission reduction roadmap for the next 3 years? Means we have to make sure they reducing CO2 year by year with a concrete, tangible reduction percentage. It'll have to report it, it'll have to be certified. So this becomes a serious criteria when we pick and choose companies. So we love the CEO or the management company who fundraising come to tell us, say, I have a wonderful product. I have a great market. I'm doing so great. So count on us. We're going to bring you, 20, 30% return investment every year. I said, wonderful, great. But wait, let me also look at your other side of the wall. Are you ESG compliant? First of all, do you know ESG? That's the first question, right? And then CO2 emission reduction. So this becomes our decision-making, serious decision-making. We're not only going to look making on how good a business you are, we're also making decision on top of ESG. So this is the investment committee. At the end of the day, we can consolidate both sides of the evaluation. So the message I want to tell the audience here is that this is the time is coming. So don't ever think about your wonderful business is about making money. You have to be a responsible company as well.
Okay, this is when you said actually before we came on to the stage, you said that you would basically be looking at the people probably more than the story and the product. Ronald, that's the same for you. And you said you will also include ESG standards into your measurement of a company. How do you weigh those two sets of measurement?
Well, you asked me kind of two questions. So let me answer the first one, the management. Management, especially in early startup companies or early stage companies, is probably the only thing you can look at because the business is not that established as of that stage. And therefore, you have to look at the management team's vision. What are they trying to achieve? Do they have what it takes? Do they have a strategy? And the strategy, is it implementable over stages? Is it realistic? So that obviously is important. But I think from the last 3 years of COVID, that also added a very valuable additional data, which is how well they have done in the last 3 years. Some companies just completely collapsed. Some companies have managed to just, founder sell their houses, borrow money, this and that, and basically plead and plead to their shareholders for additional support, all kinds of ways. And it's kind of like a survival of the fittest test. And if you can pass that, I think that actually is a very valuable data point for any investors looking at how resilient and how resourceful a entrepreneur or a management team is in confronting in a calamity situation. So that will be one of the main things. Now, obviously, the other thing that we looked at is we're looking for management that have more realistic, feasible objective. I mean, 3, 4, 5 years ago, we're very used to people saying, oh, I'll double my revenue every year. For the next 5 years, it's double, 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 right? They talk as if it's just come naturally. And if they can't do it, they just buy it. And that obviously doesn't work anymore. And now you have management talk about their revenue target, how the building blocks of how they will get it, and in doing so, what kind of things are you sacrificing or risking? It becomes a lot more logical. I think that is something that we definitely look at a lot more. Now, in your second part of the question on ESG or environmental related impact, as I've said, I think most of these companies would not have that very high up or that first agenda in their mind. But if they are doing endeavors that are contributing towards that end, they would naturally have more sensitivity towards that. And the way we look at it is, for instance, EV or the autonomous driving companies that we talked about prior to coming on. You look at how many vehicles that they can empower. And are these vehicles replacing the existing ICE cars or ICE vehicles out there? So in a way, you can artificially come up with some hypothetical analysis of potential replacement. So, but that is one consideration. But I think we would still be focusing on whether the company has the case and has the product and has the technology to take this further down the road, and therefore the impact to the overall reduction will be a more sustainable one. I think that will be more of a consideration.
I hope that you can share with us one case to more further elaborate on what you just said. For instance, the Mogul autonomous driving case.
Yeah, I mean, one company that I'm actually a founder too is also in exhibition right now. It's called Mogul Mobility, and that company basically is an autonomous driving as well as smart road infrastructure company. And when they started, they were actually started with a different business. It didn't work in the end, and they have to change. And the company has been 7 years. So I have been sticking by them for 7 years. And frankly, in the middle, made 2 or 3 misjudgment. Not that they didn't execute what they wanted to do, but the impact or the result wasn't what we were expecting. And then we ended up with this particular business about 4 years ago. Through an experiment, frankly, in Beijing, the Xunyi government came up with an 8-kilometer road stretch where they wanted to experiment putting on LiDAR and sensor and drive through the buses to drive to see whether there's efficiency gain as well as safety improvement. And we put it on, and it's out of our expenses. The Xinyi government had no money for us, and you can do it at your own expense. And we did it, and we had it on about 12 or 15 buses that were running, and the accident rate and efficiency improved dramatically in the next 12 months. And then COVID hit. After COVID, the government decided to spend a lot of money on smart infrastructure, and then they looked around for companies, and that's the only one that had any feasible project with data, and then the rest is history. Then we started to hit the ground running. But in hitting this stretch, I reminded the CEO all the time that we have to run this business as a long-term business, as a business that can change city mobility and transportation in a profound way. Not just come with one killer product and try to sell 10,000 units and then off we go IPO and then that's the end of it. And that's why I think COVID has really helped entrepreneurs that were able to survive the storm to have frankly, a longer term perspective in building their businesses.
Speaking of COVID, tell us what are some of the new investment trends in China pre-2020 and now?
Obviously, I think a lot of you just reading the press every day will see ChatGPT, autonomous driving, artificial intelligence all the time, these buzzword alphabet being thrown around all the time. And then you have OpenAI and all these companies, these new unicorn. But frankly, there will be a lot of names getting bounced around, but who actually will be at the end of the road, become successful, is always a question. I more focus on companies, how aware are they with how AI or GPT or autonomous driving or all kinds of robotics can improve their business. Frankly, at the end of the day, it's just like Web 2.0, the APP business. If you can't connect the real commerce and business and people together, then I don't care how good your technology is, it won't go very far. And that's why in my topic with Web 3.0 yesterday, where I was another panel speaking about the topic, as well as GPT technology or robotics, if you can't connect with your real business, you're not going to go very far. And that's why on one of the companies that I'm currently managing full-time, BitAuto, one of the things that I have asked the team has focused a lot on in the last 18 months is to use AI, or now called GPT technology, reducing costs. One of our auto finance company, Yixin, used to have, 7 years ago when we vet someone coming in with a credit application for a car loan, probably only 20% is carried through the APP, and the rest in the back end is all human. And we have a few thousand people, and probably 1,500 of which is focusing on that. But through the past 18 months automating a lot of the process, now about 40%, 50% of the work is all done by AI technology. And our costs have gone down 35%. But the efficiency, meanwhile, has improved 50%. So we can improve loan 50% more or faster. So I think a lot of companies will continue to go in that direction. And then for Bit Auto, it's also a topic that I touched upon yesterday. We started using AIGC, artificial intelligence generated content, because we do a lot of short video promoting cars and promoting different brands and car-related concepts. Some of these videos could be just 30 seconds long, 1 minute long. Initially, when it started, there's a lot of, kind of like 2-3 people making videos. But now, with enough of it and enough parameters being set, knowing what the consumers like to see, we also can use a lot of AI to replace a lot of the human element. And we can generate content higher quality as well as more accurate to the consumer, what they want to see. And also, frankly, a lot more choices. So that I think, looking at companies, I wouldn't say I will only invest in AI, robotic, and ChatGPT. If it's a consumer-oriented company or any other technology company, I would like to see how they embrace this technology and see how they improve their own business. That, I think, is where the opportunities are.
Okay, consumer technology is definitely the new black in the investment arena. Eddie, let me go to you. We still have a few minutes left. I want to get your advice on businesses that wants to go global, because we know that in terms of their ESG practices, because we know different countries have different sets of ESG standards, and it's very hard to come up with a unified set of standards for all companies, all markets. So what is it that they can do if they want to operate in another country?
Yeah, very good question, particularly here for many Asia-based companies, whether in the consumer space or in the manufacturing, because Asia, particularly the emerging Asia market for Asia, supplies more than 50% global supply chain. So, just think about one factor. January 1st, 2024, next year, EU going to posting carbon tax. So it's going to penetrate to whoever supply the value chain products. You buy a raw material, halfway product, then you assemble. It's going to be measured. If you're not compliant with the ESG, the net zero, a so-called framework or standard or certification, you still can export to EU market, but you have to pay carbon tax, which means you're going to cut all your profit. You're going to lose the money. So what you do? Either you don't do business, or you change yourself, make a transition. So I think this is come to become a life and death. It's no longer be a choice, as I earlier mentioned. So, but then how to do it is that for this market, since many of our companies, even you're behind the scene, but sooner or later, or already happened, some of your products or your components are exported to other markets. So as I said, climate change is coming, so ESG standard, CO2 reduction requirement have to be part of your business framework. So what we do as an investor, we anticipating the challenge for the company, for the portfolio company that we invested, or for the management team. So we wanted to acting now as a strategic investor. We wanted to using our skill and knowledge to helping the portfolio company to define, have a transition plan from here till in the next few years to be a ESG compliant and net zero impact friendly company. And we do have a lots of practices in the market we're adopting. So this is a real work. So I think that the question is, you look at, we seeing, for example, we're seeing some project right now in Indonesia. It's called green steel manufacturer.
Green steel.
Green steel, yeah. It's a very good company. We most likely will invest. They already achieving a green steel manufacturing means 80% of their steel products, you know, the long steel, the flat steel sheets, already achieving 80% carbon credit already in there. But they're also doing a lot more in ESG because they wanted to export their product next few years, go to Europe, to North American market from 3% now to 20%. That's why they can achieving much higher margin. But as I said, the carbon tax is coming in EU. So this company already spent last 3-4 years preparing themselves with a very strong consciousness about ESG and the deal. That's a type of company we really love it. We said, but now they say, you know, you guys also have the same vision. You bring the capital to us, but at the same time, you become a strategic support and help to work with us together to even become a better in ESG. So that's a type of company we're looking for. Same thing in India, we're looking for a lithium battery recycling company. They're also having very strong mindset. I mean, they're right in the middle of the ESG and decarbon sector, but they are a service company helping to take use the battery, recycle, distill the lithium material and sell to global market. So what's so good about this company? While we're evaluating the company, they show us a new contract. Just a few months ago, they signed a 15-year sales contract with a large strategic buyer from Europe. So in other words, in the next 15 years, they don't have to worry about who they sell to. They all just have to make sure they produce enough products. So because they're already in the space, they already have all the qualification meeting the requirement for those other markets, you know, the European buyers. In China, we now have a 20-plus company, very similar. Either they're in the middle of the solution provider or technology provider for helping traditional industry to reducing CO2, or they are a product company making products, but they already having a very strong internal system how to transiting from a non-ESG compliance to ESG compliance business model. And we're going to adding additional value on top of it with capital, with the mindset, with the systems. So I think this is where we're going.
Okay, so that is not only just looking at their own businesses, they need to look at the entire value chain, be prepared for regulation upgrades, which means to think ahead.
Yeah, today I think any Chinese company, Southeast Asia company, India company, you can't only do for work for your own home market. Mm-hmm. As I said, 50% of lots of business in this area is really global supplier.
It's a truly integrated
already, yeah.
Integrated global economy. Thank you so much, gentlemen. We have exactly 2 minutes left. So both of you, each of you have, let's say, less than 1 minute to give a final one piece of advice, less than 1 minute, to some of the business startups here. Maybe they would be potential partners with you guys.
I think I've said a lot of it previously already. I think you have to exercise a more critical look at yourself, where your value is, and in implementing your value and your strategy, what discipline do you have in terms of how you achieve your objective and intermediary targets. And if you are, then I think, and especially if you already had a business pre-COVID and you get through it, I think that's already a good start. I'll leave Eddie with more time.
Okay.
Thank you, Ron. I think maybe I just continue my earlier point. I think today when you run any business, I mean any business, you have to open your eye, look at the sky, look at your left, look at your right. It's not only about business itself, it's about the responsibility, about ESG, about decarbonization. You have to look at the global market context. You have to look at your home market. You have to look at Asia market. You have to look European market, North American market. So it's because we said post-COVID. So the business is highly active right now in the next few years, even though there are many other challenges. So open-minded, be a responsible business entrepreneur is the key to the future now and the near future success. Thank you.
All right, thank you very much. Businesses, you need to think long and think wide. All right, thank you so much. Let's give them a round of applause. Thank you so much, Eddie Chen, and thank you so much, Rodney Tsang. Thank you. Thank you, everyone.